So guys, let's go. The two candle theory concept is simply derived from the fact that if a candle closes bearish, there is a high chance that the next candle will continue bearish. There are a couple stages of a candle formation forming, and that is a wick must form first, then a body next. If it's going bullish, it's a wick first, a body next. Everybody should know this. So in order to take advantage of really good risk-reward ratio trades, we have to find areas in the market that we can take advantage of better risk-reward ratio trades by identifying the potential setup before the setups happened. That means if price breaks a previous structural low in any sequence and the wick has been formed, this is called what? What kind of trade is this called here? A breakout. If the market pulls back to around 50% of the previous level, what kind of trade is this called? 50% retracement, retest trade, okay? Now, if the candle pulls back to the 50% retest, what color is the current candle status?
Green.
Great, good. What color is this candle again?
Red.
Okay. If the current candle is green, and I've just said to you sell when the candle is red, how difficult do you think it could be to take a trade psychologically because of the colors or because of the current status of the candle? Anybody think it would be difficult?
It's psychologically, I'm going to eyes when you should be going to sells.
Correct. Psychologically, it could be difficult to take the sells because the current candle is green. But how many times have we seen that price closes bearish, the next candle is bearish, the wick is formed, and then it closes bearish?
Many times.
Many times. So instead of being the trader that decides to wait for the candle to go red, we now need to start to do what? Build a belief system that if we get the evidence that the market is pulling back, even though the candle is green, we can still look for sells. Reason being is if we get into the sells early, as opposed to waiting for take profit down here, we can get take profit here. But how do we do that? What do we have to do?
Gather confluences.
We have to scale down. Okay. We have to scale down. Now, in scaling down, what does that create for us? Well, let's say the previous candle just closed bearish. We are anticipating the next candle to go bearish. The current candle that is opened is now pushing bullish. And we want to see the market make a new lower low. The formations that we'll see on our intraday timeframes should be a clear downtrend with an area in the market that price is now pulling back to create either a retest of structure or create a lower high of structure. Once we get either the retest of the previous structure, a retest of the low of the previous structure, or the lower high, what are we now looking for?
Momentum shift.
Fine. Now, in order to get momentum shifts, we're going to need to identify potentially indecision candles. We're potentially going to need to identify momentum candles. We're potentially going to need to identify pin bars or wick rejection candles. Make a note of this. This is the only thing that you're going to be looking for as a trader. This here, this information here, this is the only thing that you're going to be looking for when you scale down to your lower time frames. Now, let's say that I take the sell when I identify these things here, and then price starts to shift in my direction and then pushes bullish and stops me out. Is that a bad trade?
No.
It's a fantastic trade. Let's say the market starts to push bearish and now we get to one-to-one break even and it turns back and stops me out and then continues bullish. Is that a bad trade?
No.
Not at all. What do we classify these trades as? Simply just losing trades. Remember, what are we relying on? We're relying on our risk to reward ratio, which is our edge to ultimately make us money in the long run. So then if that is the case, should we fear entering even though the candle is bullish when we want to take sells?
No.
Because we have to create a belief system that all this candle is doing is what?
Just a pullback.
But what is it creating?
The wick
A wick.
A wick before it then does what?
flips and pushes.
Turn bearish.
Flips and turns bearish. If we scale down to our lower time frames and we see indecision candles, what does that tell us?
Buy is not working.
We need something a bit more specific.
Rejection.
There is a depletion in this bullish movement. If we get a bearish momentum candle, we are seeing a depletion in that bullish momentum. If we see a pin bar wick rejection, we are seeing a depletion in that bullish momentum, meaning that price is doing what? It is failing
To break.
to push higher. If price is failing to push higher, and we see that this previous candle closed bearish, what does that illustrate? The bearish momentum is still strong. Now, can you see how, from a logical perspective, how this all makes sense? There's no science behind it. And this is the simple theory behind trading the two candle theory. Now, let me ask you something. Let's say we have a key level here in the market. We see that price has come bearish, push bearish, push bearish, push bearish. Then all of a sudden price rallies off at this level when you see the market continue to push bullish. Then the market comes back to this level after a long period of time. If I get a bullish candle closing off at this level here, can I now look for buys?
Yes.
Yep.
Yeah.
The reason I can look for buys is because in this scenario, it makes sense. Now, what comes first, the story or the evidence?
Story.
Evidence.
That's
The
all.
evidence.
Evidence first. Because if we are waiting for price to come back to this level and we create a story in our heads that price can bounce off this level and go bullish, what are we going to start doing? We're going to start scaling down. We're going to start looking for evidence on the lower time frames to look for those entries. And then what could happen? We could enter the trade and the market continues to fall down. So we're not looking for the story first. What we're looking for is the evidence to then make sense of the story next. So if this candle closes bullish off at the support level, even though this structure is in a downtrend and we haven't broken this structural high, can we take a buying opportunity?
Yes.
Yes.
Very good. And the reason why we can take a buying opportunity in this scenario is because of this reason. Let's say now we identify a 4H candle close. From a 4H time perspective, what does this level indicate to us?
Previous high.
Our last lower high, meaning that as long as price trades below this level, we're good for what?
So
Sell.
Correct. In a push phase, what do we anticipate the market to do?
Retest of the
Exhaust.
previous high.
create a lower
Exhaust.
low.
Now, if this candle closes bullish, I'm looking to take this trade where? Here. The current behavior of the market is indicating a bullish sentiment. If I identify on my intraday timeframes that I get a bullish close and I want to enter the market and place my stop loss below a high low on the intraday timeframes, is it wrong for me to take a buy?
No.
No.
I'm not anticipating that the market's going to come up here because I'm not trading the structure of the market. I'm trading the behavior of the candle. So if I get an entry around here, and I'm fortunate enough that the market's behavior continues to continue in the direction that it's just showed evidence of, then what's wrong with me entering here, taking advantage of a 4H range candle back to the high here, taking profit, going break even or taking partials before then the market structure decides to continue in the direction it wants? There's absolutely nothing wrong with that, right? Does this make sense to you guys?
Yes.
Yeah.
Yeah.
What I'm trying to do here is just build an understanding of what I mean, what it means to trade the two candle theory. Are we focused on what the structure is doing per se, or are we focusing on what the candle has just told us to then look for the support and evidence to execute that trade, regardless if we take a buy in a sell bias market? Because you have to really think about this. And this is what's so crazy about the whole situation here is this. You have 1 hour, 2 hours, 3 hours, 4 hours allocated, however long, I don't care, to trade in the market. This is 4 hours of your time. This is 8 hours of your time on the close. Why do all these other 20, 30, 40, 50 candles have any relevance to your life? They have zero. Let me tell you something also as well in this scenario. If price pushes bullish, then eventually comes back to this key level, and then we have a strong bearish candle break below this level, how important is this level to you now? It's irrelevant. But if price bounces off of this level with a strong bullish close, how relevant is this level now? Very. Please remember that. When we come to the charts and we see what's happening here, how relevant is this level to us?
16 hours worth of information, so it's pretty relevant.
But the candle's closed strong bullish. We could even say that it's closed below this level. I would hope you wouldn't do that. Only intraday traders would do this. You want to isolate your area where the wicks are forming, right? Are we looking for sells or are we looking for buys? As part of the two candle theory, we're in theory looking for what? Sells. But in order to look for sells, we need the market to convince us that it's going to continue bearish, right? So in a scenario like this, if we place our level here, and then we look to take the sell on the break of the low here, this is now classified as what? Our retest area. This is now classified as our breakout area or our break and retest area. Okay. Is this candle convincing enough for us to take the sell if we get a retest?
Yeah.
Okay.
Not really.
If price falls back to make the retest, what is our range?
50%.
Yeah, I know that, but what is our range for sells?
To the first area you marked.
Correct. Back down to this low. Now, 33 pips is a lot of pips, but let me ask you something. If you're trading this on the 4-hour time frame and you get a wick that forms like this, pushing bullish, yeah, you have a wick that forms like this, then you get down to your lower time frames and you see a bearish close, and then you place your stop loss above the wick. Do you think that this is a favorable trade?
Yeah.
Yeah.
No.
Yeah.
From a 4H perspective, is this a favorable trade?
Yes. Yes.
It's not.
Why?
Because you lose the range of the 4H candle. The only way you can execute this trade is by doing what?
Scaling down.
Scaling down. When you scale down, what you're then able to do in this scenario, let's go to the 5-minute. What you're then able to do in this scenario is you're able to decrease the range of these candles at the 50% retracement mark. So what may look like an entry on the 15-minute, let's say something like this, or the 4-hour, you can now use what we just shared a minute ago, identifying marks like this, that now increase your ranges of winning that trade. Now, I tell you why you need to be aware of this, because what we have here is a scenario where we do believe the next candle will be bearish based on the information. And this isn't just based on the fact that the candle closed bearish. We have to make sure we're gathering our evidence. But based on this scenario, we're also seeing that price is not breaking the low either in this sequence. Does this make sense?
Yes.
Okay. If we had a scenario where the price has broken this structural low, and no, let me find a better one. This scenario, and I'm going to go over some really good examples in a minute, right? But let's say in this scenario, we have an area where price is broken this level. If price retraces back, do we need to be concerned about this structural low? Do we need to be concerned about this structural low?
Not really.
No, because this is the area in the market where price failed. We have the evidence of price breaking, and now we can just anticipate a very simple, easy continuation trade. The reason why I'm highlighting this, guys, is because a lot of you just think that if there's a setup, I can take it because it looks good. What I want you to start doing is identifying high probability trading setups based on how the market is forming in terms of the scenario that we have here when we have the break, not concerned about the structural lows, versus an area here in the market, which may not look significant to you, but at the time, you can clearly see that the market is doing what? Doing not much. And when I woke up this morning, I decided not to trade because in the back of my mind, I could just see that the market is not doing too much. What I am convinced about is if this does decide to continue bearish, then I don't need to worry about jumping into this trade now. What I can do, let's give it to you in the opposite direction. I don't know if it's going bullish, but I do know that if it doesn't continue bearish and it starts going bullish, what I can then do is start using scaling down techniques to identify the area where price is failing to break, identify the structure of the market that potentially resembles the same behavior. And I mean, this is not a great example, but then take advantage of breakout trades that look something like this. The reason why this becomes a higher probability trading setup is because now the behavior has spoken to me first, and then I can see the evidence. I can see the evidence, and then the behavior spoken to me, illustrating that that red candle, that 4H red candle didn't break. The behavior is now shifting. The current 4H is bullish. And now if we start breaking the highs, there's a very high chance we do what? Make a new higher high in the sequence. Does this make sense?
Yeah.
I hope so. So what this will help you to do, right? Or I'm hoping it will, is it will help you to determine one important thing. The most important thing in a sequence like this is this. If you have areas of traffic or support or resistance where you can see the market is not breaking, what trade idea is best in this sequence?
Waiting
Sell.
for the breakout.
Very good. It makes sense in this sequence to look for a breakout because you had added confluence. If the market is speaking to you and you don't have anything for price to resist, then you can look for what? The retest. Please tell me you guys are not getting confused. Aaron, yeah, fire away.
Hi, mate. Sorry. So if I can just draw this on here, mate, just to clarify something up, if it's going to let me. I do apologize. I've never used this before in my life, but this area here, if we was to consider this a break above a major key area in the market where price failed to break above, it did some moves, and now we broke above it, would we be wrong to look at potentially a 50% retracement as well as the two candle theory for to come down back to that red
100%.
level in the market and then continue to the upside?
100%.
Right. Just to clear that up. Thank you very much.
Let me explain something. What is a better entry? Here or here?
Further below.
All right. If you miss the best move, what you're supposed to do? Stay out.
Second best. Oh, right. Fair enough.
Yeah.
Right.
Stay out.
No worries. Thank you.
If I took this sell based on the two candle theory concept, or based on what I just told you, a candle has to close bearish, I can only take this trade in theory back to this level here before I have to think about management, simply because it's around the 50% retracement of the previous candle. Okay. If price comes back to this level, then I have to question whether I'm going to be looking for the 50% retracement of this previous candle, anticipating this one to go bullish because of, firstly, the status of the 4H candle, which is strongly bearish, and the fact that this is a very strong move to the upside that can be corrected based on news. The reason why trading strategies cannot be made rule-based is because of the variations. Okay. I think we're going to go too difficult here. But what we have to be considering at the time is what evidence makes sense in this instance. If the range of this 4H candle had pushed, let's say, to a decent range, then it would make sense that there's a higher chance this can continue bullish. Let me just tell you why. Every candle has a range, right? If this candle has pushed bullish and we're looking for that 50% retracement, and we can identify that the range of this hourly candle has met the range of the previous candles, what is the chances that this candle will continue to push bullish? It's very slim. Also, if this candle we can see has pushed strong bullish and now creates that top wick, we don't need the daily to identify that because we can identify it from this range of this candle here. It's huge in comparison to the rest. What is the chance of this continuing higher? Very low. Look here, we have a candle that pushed really strong bearish, and then look, we had an immediate correction. You guys need to understand, you guys should know this or be aware of this through your own experience in the markets. So if the candle pushes a decent range and gives us a half decent candle size, as opposed to a really strong, overextended, flipping, humongous candle here, then the best thing for us to do is just to say, what? Maybe I missed the best move, which was the breakout of this area here to take advantage of this range. And now instead of FOMO and thinking price is going to continue up, I either look for the sells because I expect the 50% retracement, or I just stay out of the market and wait till tomorrow. Does this make sense?
Yeah.
Yes.
No,
Go on.
no, I was just saying, yeah, it makes sense.
The candle sizes make a huge difference, but there is no right or wrong answer to any candle size. It is specific to the times that you're trading, the pairs that you're trading, the correlations that you're finding and the sentiment of the market at the time. Like I personally know from experience, I would never enter a buy after this. Ever, 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 ever take a buy after this candle closed. Ever. What I'm looking for is for the accumulation phase over here, for the market to start showing signs that it's failing to continue to push higher. And then I'm taking advantage of this. That is 100% fact. I'm taking advantage of this move here or this move here. I just explained to here, because now what I'm saying to the daily candle or whatever candle that I need to highlight on the daily, I'm saying to the daily candle, okay, you've pushed really strong bullish already for the day. Now I want to enter buys, just continue pushing bullish for me. I know that the best entries on the daily are going to be down here. So if I'm taking a trade, I want to be hitting my trades around here, right? Around this area here. I'm not saying that it's the best area, but okay, let's just do this, right? I want to enter it around here. Let's say this is what I'm looking for. Is this the area? Yeah, whatever, don't care. I'm just trying to highlight a point. I know this is the best area to enter. If I miss this move, that means I've missed an opportunity to gain what, 150? Well, I don't know how many pips this is. Looks like 150, but missed this whole move. Versus now saying, oh, it's push bullish. I've now identified it's push bullish because it's push bullish and let's enter the trade. That is not something you want to be doing. Okay. So I just explained, if you enter a trade, you want to be hitting it where? When the price falls back to the 50% for a decent enough range candle, or when price takes the breakout, again, if the market has got enough room to move to the upside during a high volume period. Yeah, ask the question.
Hey, Rox. So quick question. All of these patterns, double tops, double bottoms, break and retest, 50% retracements. All of these patterns are based off of the two candle theory. So no matter what trade you're taking, you're looking at that previous 4H candle and making your decision based on that.
Correct.
Every trade you take, everything you do.
Correct.
Okay.
All the way down to the 1 minute.
Right. Okay.
No, but if I'm trading 15 minute, I'll use 4 hour. If I'm trading 1 minute, I'll just use 15 minute.
I see. Okay. Thank you.
Okay. Okay. So let's just take a, does everybody understand this?
Yes.
Yeah, put it in the chat for me so I know that you understand this, please. Okay, cool. You're going to get some examples.
What?
Hi.
Can we buy 16% retracement after
Can you buy a 50% retracement after what?
the retest?
Definitely. That is where you want to get in. We just spoke about that. So if you're buying, the color of the retracement will be red, and if you're selling, the color of the retracement will be green. But you're anticipating the wick to form first.
All right, thank you.
Okay. So remember, traders, I said to you, when you're looking at the charts, you need to make sure you're zooming in. If we look at it like this, is there any trading opportunities? No, there's not. If we zoom in, now we're in business. Hey, this is a great example of what I just said here. This is a great example of what I just said here. Look at this area in the market where we can start to see multiple wick rejections and whatever else. Just because this candle is closed bearish, it doesn't mean that you're going to be looking to sell it. Even let's put it here. What you want to be seeing is clear structure in the market. Okay. So look here, we have an area where price broke above. I think we spoke about this yesterday. Does this not look clearer than this information here, even though this candle's closed bearish?
Yeah, it's clear.
Okay, look here. This candle's closed bullish. Just because we follow the two candle theory, do we want to be buying?
No.
Right. Does this not look clearer?
Yep.
Okay, this is where I need to get you guys at. Let's say now we're looking at this scenario here in the markets. We can see prices just broke above this area. Is this a buying opportunity after this candle closed green?
Yep.
Okay, but what do we have to consider?
We're not a pullback phase.
No, forget about that. We have to
Okay.
consider this area here where the wick rejections are. Okay, let's say now this candle closed green. Can we buy?
Yeah, we have a little range.
Yeah, we have a nice area back to the upside.
Yep.
Okay, if this candle closes bearish, can we sell?
Yeah.
Absolutely. We have enough room back to the downside. Look here, price created the level. This candle closed bullish. Can we take a buy?
Yeah.
We can consider it. We probably wouldn't take a 50% retracement on this, would we? But we might take a breakout. Using 2 candle theory in the 15-minute time frame, we can look for opportunities. Does everybody see how this is? Like, we just have to use common sense here when looking at these scenarios. And I think opposed to common sense, I've been really trying to think about this, but as opposed to common sense, it is just what it is, right? Some days we're going to come to the markets and the trades are going to do what? Work out for us. And some days they're not. As long as you're following the rules that you've created based on the fundamentals that you're learning, then in theory, there's no reason why you should be a profitable trader as long as you're not doing dumb shit. So now it's just time. So now all it requires is enough time for you to identify what works for you, what doesn't, during what sessions, on what pairs, what behavioral patterns you need to abide by or display in order to get the best out of the markets, the decisions that you have to make whilst in trades, whether you're a break-even trader, half stop loss, partials, 1 to 3, 1 to 5. This is what you guys are going to have to work on. The approach is very, very simple. If somebody took a sell because they saw that this candle closed bearish, I would be thinking in my head, you're nuts. Because this is something I know that I would never trade. I'm more happy to take a sell here because I see an overextended market and I anticipate the market to go down. But because this makes more sense in this scenario and I lose this, it's fine. But taking a sell like this or like this in this scenario, it makes no sense when the market is speaking to us. Okay. What about this current candle on GJ now as previous close bearish? So the previous candles closed bearish. So what I'm doing in this scenario is just isolate my structural low, 50%, and my structural high. I'm now anticipating pound to be weak. I need to see pound weakness. Okay.
Looking short on that myself, if I'm being honest.
So I need to see pound weakness. Pound is not weak at the moment. Pound is not weak. So now I need to check for yen weakness. CAD needs Aussie dollar needs to go up. CAD needs to go up. New Zealand dollar needs to be going up. I see this. I see this. USD JPY. Now, yen is not weak. So that means I'm relying on pound. Sorry, yen is strong. We're looking for yen strength. Pound weakness, yen strength. Sorry, yen down. Nope. Yen down. Nope. Yen down. Euro weakness, USD down. So euro is showing signs of weakness. Yen down. Now, so now pound is not weak. Previous candle closed bullish. Previous candle closed bearish. So there's no confluence. Secondly, I'm relying on JPY strength. Yen is definitely not strong. Looking at the market structure. So that means that this trade is literally, well, I don't know any smart sayings, but this trade is just a death wish, a death trap. But if you are trading this, what you're looking for is for price to come back. Now, don't even trade it, man. It's up to you, whatever. But you're looking for price to trade around the 50% region, or you're looking for price to create a strong bearish candle close or multiple wick rejections to isolate then a structural low that you anticipate price to break, and then you're looking to take the trade once given that evidence. There is no evidence here whatsoever to take this trade. And I think with the market analysis, the way we've just gone over it, there is absolutely no evidence that you should be relying on yen strength or pound weakness. Does this make sense, guys?
Hey, Rox, is that how you identify currency strengths in the morning? You just tell yourself
Correct.
JPY up, JPY up, JPY up.
Correct.
That's what you do?
Correct.
Got you.
Now, you guys might be saying, well, is that enough? Well, go to the days where the markets have moved really strong, right? Let's go to the days when the markets have moved really strong. Let's start from here. This is 8th of April, 6 and 10, right? On pound USD. 8th of April, right? Here. So if we see that the market conditions on the 8th of April have been moving strong to the downside over here, and we can see that here it hasn't followed the same. What could that suggest to us?
That's not as strong as we think it is.
Correct.
Yeah.
And I beg you guys, really trust me when I tell you this. It's probably best to stay out of the markets because there's probably a lack in volume. Okay. Or there is not enough correlation that lines up to push the market in the direction we want it to go. I'm trying to find something that does correlate. Let's take a look at this. This is on the 11th of April at 2 o'clock in the morning, 2, 6, and 10. 11th of April. No, again, we don't have a correlation there because we have a discrepancy with yen and pound. Let's try and find, I just want to show something to you guys where we had strong market conditions. Oh, this might help. Please, God. Yes. Look here. Okay. Strong bullish, strong bullish, strong bullish, strong bullish, indicating what? Potentially Aussie dollar strength. Now look here. We have it lining up. Strong bullish, strong bullish, strong bullish, strong bullish. Please be up. Yes. Strong bullish, strong bullish, strong bullish. If you start to see this behavior, let's say at 2 o'clock, and you start to see this behavior at 2 o'clock, and then you want to trade Aussie dollar JPY, and you see this behavior at 2 o'clock, guess what that gives you? Immense amount of confidence to say, hold on, Aussie dollar is strong. It lines up across the market. I can't see anything going on with pound or USD, but I can see Aussie dollar strength. Here's confirmation that I'm on the right side of the market today. So when you do scale down, you can then do what? Look for potential trading opportunities. And I'm telling you, guys, I'm telling you, at one point or another in the day, you will find that if the currency that you're trading is strong, the market conditions will line up. And that is what you call a high probability trading setup. What date is this? The 10th? No, it wasn't the 10th. 6 at 10. 6 at 10. 6 at 10. Money, money, money. You know, money, money. Like today, the reason I didn't trade is because of the market conditions. I just couldn't understand. On pound, one was going bullish, one was going bearish, and then in gold, it was what was gold doing again at the time I was at the charts? Oh, I don't remember, but it wasn't doing anything special. Okay. And that is it. I'm staying out of the markets. I'm not then saying to myself, oh, look, this candle's closed bullish, this candle's closed bearish. Oh, hold on, this candle's closed bearish, time to look for sells. Because if this candle closes bearish, what time is this? 12 at 6. 12 at 6. 12. Yeah, that candle closes bullish, bearish. Now you're saying, oh, I'm looking for sells. Then you go over to pound and then it's done this. It doesn't make sense. Do you understand? To look for a continuation of that. What you will find, guys, is one pair will lead, the rest will follow. I hope I've driven home this point. And this is what keeps me out of the markets, guys. This is what keeps me out of the markets. When I can't make sense of why pound is supposed to be strong on pound JPY, but it's weak on pound USD. I want to trade the days when I can see Aussie dollar is going ham. Boom, boom, boom. Then I'm confidently going to take trades all day long. If I don't see it, then you have to stay out. What's the question?
If I'm trading GJ, if GJ is the pair that I'm trading, would GU and UJ good enough to look at for currency strength?
Yes.
Okay, thank you.
Okay. Let me ask you guys a question. At the pre-London, right, on the 6 o'clock close, can you all identify Aussie dollar strength?
Yeah.
Pre-London, on the 2 o'clock close, can you confirm that Aussie dollar strength?
Yeah.
Pre-London, on the 6 o'clock close, can you continue to confirm that Aussie dollar strength?
No, no.
Yeah.
Okay. If the markets line up, there's a very high chance you're on the right side of the market today. If you have to struggle to figure it out and you keep going backwards and forwards trying to figure it out, there's a problem. That is your sign to stay out of the markets. You will make a lot of money when you know when to walk away and not trade. And you'll find a lot more peace as a trader because you won't feel like you're forcing the process. Like you see this shit right here, this is something I would never trade. Makes no sense. This closed bullish, this closed bearish, and I don't care if there's CPI news or whether dollar is weaker than the pound or yen is stronger than the pound. I want this to line up. The currency on the left. Actually, that is such a good lesson. I want the currency on the left to line up. If it lines up, I'm involved. 2 o'clock close. 2 o'clock close. Boom. New Zealand dollar strength at the time of the close. Bish, bosh, bash. Scale down. Look for my trading opportunity. Jump into the markets. Again, 2 candle theory concept. If I'm looking to take advantage of 2 candle theory concept, I'm looking for, let's say, 6 o'clock close. I'm looking for the bullish close. I'm then isolating my retest level. I'm scaling down to the 1 minute time frame. And then I'm saying to myself, oh Lord. I'm saying to myself at 6 o'clock. Oh, that's more of a pause and go there. But I'm saying to myself, okay, previous market structure, the behavior of the market, pushing bullish, 15-minute close bullish. Now it's an opportunity for me to take a trade after the candle close. Where do I want to take it and what makes sense to me? Maybe this. Depends how I'm feeling at the time. Depends how I identify at the time. But maybe this. Okay. That is.
Can I ask something quick?
Pardon?
Can I ask something quick? So based on what you just said now, right? If you look, say at all dollar pairs, say NU, EU, GU, all of that 4-hour close strong bullish, so that give you confidence to look for a buy against one of them.
No, I don't care about yen or USD in this situation. I'm looking for. That's a great question, by the way.
Now I'm talking about now current price, like EU, GU, NU, AU, all 4 hours close strong bullish. So would that be confidence enough for you, or would you look?
You're talking about current, like right now.
Yeah.
With this close bearish, so I'm thinking straight away euro weakness. The previous candle closed bearish, so yeah, euro weakness. The previous candle closed bullish, so now there's a discrepancy, right?
Yeah.
Okay, but what I'm now looking at is what is the current status of this 4H candle in this scenario. I've either got to do one thing: identify the status of this candle, because I have 2 confluences here, which is euro Aussie dollar showing signs of euro weakness and euro yen showing signs of euro weakness. If I find a discrepancy after I've got these 2 confluences, I need to figure out what the current status of the 4H candle is, which is bearish, which goes along with what we said. You can sell the 4H candle if it's bearish, as long as you get the evidence. Or now we have to figure out if the euro is weak or if the dollar is strong. So if we're looking for the dollar strength, New Zealand dollar USD should be pushing bearish. USD CAD should be pushing bullish. And USD Swiss franc should be pushing bullish. Okay. So now we've got weakness with the euro and strength in the dollar.
Yeah, but now you're looking at the open candle, not the previous close.
Yes,
Correct.
of course. Yeah. Here we have previous bearish close, which is an indication of what? Euro weakness. If you use a third pair and you get a discrepancy, which is a previous candle close bullish, you now need to justify why euro wasn't strong on the previous close. Oh, sorry, euro was strong on the previous close versus being weak here and weak here. Does that make sense?
Yeah.
Okay. So in a scenario like this, what I'll be saying to myself is I'm identifying euro weakness. It's a shit time to trade, by the way, guys. But let's say I identify euro weakness and then using scaling down techniques to identify the behavior of the market on that candle close. And then I'm saying to myself, if I get the bearish sentiment shift, which will be this information here, I can look to take the trade. Now, this becomes a very high probability trading setup. Not at this time, guys, but this is how you would approach it, because we've identified the euro weakness and we've also continued to add confluence to that by looking at euro Aussie dollar, previous candle closed bearish. And then we're also identifying over here that the euro is pushing bearish at this moment in time. If the euro is weak, every euro candle should be going bearish. So now if we take a trade, all we're anticipating is that this 4H candle, being the one that's lagging right now, should continue to follow through. You can validate this one last time by saying to yourself, okay, I believe euro is weak. Let's just see this one last time. Is the yen strong? If the yen's strong, then you don't want to trade it. So for Aussie dollar JPY, it should be going bearish. It's not. For CAD JPY, it needs to be going bearish. It's not. For New Zealand dollar JPY, it needs to be going bearish. It's not. So now this does not become a high probability trade anymore because the yen is not strong, only the euro is weak. Does this make sense?
Yeah, cheers, bro. Thanks for that.
So based on that, I can avoid taking a trade that is still a good trade, but I can avoid taking a trade because it's not a high probability trade and setup. Like I said, if the market is moving, guys, you will see the market moving together. We have great evidence here of weak euro, great evidence here of weak euro. We have a discrepancy here. Previous candle closed bullish. That is not something we want to be involved in, because now we've got to go and do the research to figure out if the dollar is stronger than the euro, for the reason why this did not continue bullish. Continue bullish. So now if we were to trade this, we will be isolating the low, the middle, and the high. And in order to take this trade, we need to identify euro strength. Did the previous candle close bullish? Oh, no. But what is the current status of this candle? Bullish. Did the previous candle close bullish? No. What is the current status of this candle? Bearish. There's a discrepancy. So now I need to validate that the euro is going to be strong because dollar is weak. So New Zealand dollar needs to be pushing bullish. It's not. USD CAD needs to be pushing bullish. Maybe. Needs to be pushing for this to go up. It needs to be USD weakness. So I need to see this pushing bullish. I need to see this pushing bullish. I need to see this pushing bearish. And I need to see this pushing bearish. It's not happening. So there's one or two things that's happening right now. The market's super low in volume, or there's no momentum. Or just today, just for today, there is just not enough evidence of any currency strengths or weaknesses that we can rely on. And that means stay the hell out. Who feels like today was tougher to trade than yesterday?
Yeah, Don.
There you go. So I'm not making up shit here when I'm telling you this. Okay? We all can identify the markets are bad. I'm just trying to illustrate how you will identify that by looking at the behavior of the candles in the day, or at the time you look at the charts. So I'm not going to be trigger happy to scale down to take this trade as a buy if this candle closes bullish for the sake of trading today. Hell no. Because I've already looked at the market sentiment, which is this information here, and it's not telling me much. It's not convincing. And for that reason, I'm out. Go on, Brian.
Yes, Rox. When you isolating that single candle using the horizontal ray, do you just isolate it by the body and not the wick?
Yeah, so this is something you're going to have to just learn to do through experience. But in this instance, it makes sense that I can isolate this candle. Okay. If the candle's a very strong bearish candle like this, I'm not going to trade, because the market has to do too much for it to pull back to this level. And I've already said this in the beginning. It just doesn't feel right. Okay. The range of this candle is decent, so I will mark it. The range of this candle is way too big, so I don't even want to see a candle pull back here. I prefer to look for the breakout. Or more often than not, I'm staying out of the market. If the market creates a wick like this, then I'm not going to isolate this as my 50%. I'm going to say, what range can I use? I'm not going to use the high of the candle in this instance like this, because I know this is in theory where price is not going to come back to. So I'm looking for an area where price could find that reaction. And in this scenario, this makes more sense to me, because this is the area where price is rejected and failed to close above. So I would isolate this high and then the area where I want price to break out of, which is this low. So then That will now be my range. This will be my 50% range. And then in a situation like this, what I'm now looking for is scaling down opportunities to look for the retest of that area in the market, which is going to be this information here. So this is the close, which is this information here. So now this would be the trading opportunity that I would be looking for in this scenario based on the range of the wick that's created here and here. And then I'm looking for price to isolate or make a low, stop loss above, and then take advantage of this trade. Does that make sense?
Yeah, that it does.
You guys are not going to get definitive answers with me because trading, there's nothing definitive about trading. It's just variations that you have to start using and getting used to, okay? Did this candle close bearish during a high volume period? Is the confidences line up? Yes. Okay. Here's my breakout level. Here's my retest level. Would you take a trade after this?
No. Personally, no.
Good. I'm glad. You can't take this trade. I know it's closed bearish, but it doesn't make sense to take this trade.
That's getting a bit overextended.
Correct. We have identify mark here of price failing to break the structure. We're never going to take a buy, even if these candles are bullish, because we haven't got a level to work with. We're identifying price failing. If price breaks above, then we can start looking for buying opportunities. Mark our structural low. Yeah, that would do, I guess. Here. Could we take this entry here?
Yes.
I think we have a little bit more room to the upside. And then again, you mark the high and the center. You have your retest, and now you have your breakout.
Yeah, it makes sense.
Let's say in this scenario here, price is failing to break above. We have an area in the market with price failing to break. Look, we have a bearish close. We identify not just the bearish close, but Aussie dollar is strong today. This is a 6 o'clock candle. Can we take this sell? Of course. Probably be a breakout trade in this instance. Can we take this one? Of course. 50% retracement, probably a nice retest here. Would we want to take this one?
Getting a little bit gone.
It's getting a bit sketchy, isn't it? At
Yeah.
this stage. So we'll probably stay out of it. If we go over to Aussie dollar CAD and we identify that this candle's closed bullish pre-London, can we take this trade?
Yeah.
It's the biggest candle in the sequence for how long? A very long period of time. Could we take this one? I think we could. Again, it is
risky.
down to you to make a decision. Some may not. I guess, you probably wouldn't take a breakout, but you might take a retest and you target back here. Could you take this one? Again, some traders may, some traders may not. But if you take this trade, you're pushing your luck, in my opinion. Because I'm not looking at this anymore and say, oh, I just want a 1-hour trade. I'm looking at this saying, Lord have mercy. If I went to bed early enough, forgot to my charts, I could have taken this and had this range. Now I'm thinking about taking advantage of this range. Do you understand? It's better to be early than late. And that is something we've all got to get comfortable doing, because the reason why you don't get it early, because you don't have enough confirmation, and not enough confirmation or evidence. No, I think you've got evidence, but not enough confirmation means what? Lacking confidence. We don't want to be traders that lack confidence. We want to be traders that have the confidence, and with confidence means we want to get in early, not late. All right. Everybody, thank you for your time. Thanks for joining.